Horlicks Network 18, Mission Poshan, Bhavishya Roshan.
If we have a trade conflagration in the next few months, that could really hamper the global economy.
If you X out the corporate banks, then I think earnings have actually inflected already in the upward direction.
Now down 11, 12, 13 points on the Nifty, and the Sensex down 35.
For Biocon, this is a huge milestone because we are the first to be approved as a biosimilar.
If you look at India, it is still an overweight for us, so it's not as challenged by some of this macro environment as some of the underweights that we've had this year.
Huge moment for Dalal Biocon partnership because more importantly, it validates our science, it validates our commitment.
The stress in midcaps is largely because of the advanced surveillance mechanism.
P. Chidambaram has appeared today before the investigating officer to give for questioning under the ASL Maxis deal.
In fact, towards the close, HDFC Bank up about 1%, as was HDFC, and that's why you got the big recovery on this index. SBI was along the flat line, but then you have the likes of an ICICI Bank, for instance, which was still weak.
Market slide for the third straight session. Nifty gives up 10,600. Sensex tumbles below 35,000. 6 stocks decline for every one advancing stock.
Midcaps continue to get better. The index slips over 200 points. SEBI, the regulator, announces additional surveillance measures on stocks, which spooks sentiment further.
Bank stocks in flat as relative outperformers in a downbeat market on the eve of the monetary policy. HDFC Bank is the top gainer.
The Biocon Mylan combine gets US FDA regulators' approval for their second biosimilar drug. Biocon stock rallies in early trade but succumbs to profit booking towards the end.
And companies under insolvency and bankruptcy code slide in trade. This after SEBI relaxes delisting regulations for these companies. Those were the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talkback, the show where we tell you all that happened in the 8 hours of trading when you were working, and we'll tell you that story in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi, Prashant.
Hi, Lata. So, as Lata said, over the next 30 minutes, we will discuss what really went on during those 8 hours of trading. 5 headlines, we'll take care of that. We have a Q&A session as always. Our experts will take your questions. IIFL Sanjeev Bhasin and technical expert Mitesh Thakur. Gentlemen, both of you, thanks very much for being here on the show. But before we start the Q&A, we'll quickly wrap out what dominated trade today. Lata.
India underperformed yet again. Now, that was a bit of a shock. The underperformance yesterday looked like that, okay, deep selling yesterday, so today cannot be another trending downward day. But that's what it turned out to be. But for a little bit of covering in the last half hour of trade, we could have ended rather nastily with maybe 10 stocks in the red for 1 in the green. So Sensex and Nifty go below optically important levels, 10,600 and 35,000. The pain is actually much deeper in the mid-caps. And again, the advanced declines show that 6 stocks in the red for 1 in the green. And the selling, as we said in the opening montage, was exacerbated by this additional volatility controlling measures, the additional surveillance measures put out by SEBI. Basically, it tells you that some extremely volatile stocks will not be allowed as part of margining, will get into, T2T, as it's called, trade segment where you can't buy them as long positions. So all that has also added to the technical tightness in the market. Additionally, of course, stocks which are in the process of getting resolved under the insolvency code now can be delisted by their new promoters without going through a song and dance. And that will mean they could be delisted very, very quickly. Those stocks like Bhushan Steel, for instance, have been seeing sharp cuts actually for the past couple of days. And perhaps there was a little bit of covering in the banking stocks. Notably, actually, HDFC, which suffered deeply. The stock had run up on expectations that the FI window is going to bring manna from heaven. It actually fell yesterday. So today, that oversold positions got covered, and that gave a little bit of green tinge to the Nifty Bank. But I mean, it's too much to expect that the market has so much factored in a hawkish monetary policy that tomorrow the policy actually turns out to be a catalyst. I don't know. We'll leave that for 24 hours from now. But you tell us, Prashant, what did you notice stock-wise?
I mean, mid-caps and small caps, again, large and sustained selling, but could have been a lot worse. Small cap index was down 2.5, mid-cap index was down 1.25. But at one point, it looked like it would be a really trending day, and that too on the way down. But things did not. I mean, it was weak, but could have been a lot worse. IT, infrastructure, real estate. I mean, these were the top sectoral losers. Large caps, pressure across. Bank IT, NIIT, tech, Bajaj Electricals saw some late selling. I mean, it was okay all day and then sold off last 1 hour or so. Lemon Tree, recent listing, I think 7% gone. And something like a Sonata Software was down about 10-11% as well. So that is where bulk of the problem, and I think bulk of the focus, rightly so, has been, that is mid-caps. Lata.
Okay. Well, let's ask our guests, where do we go from here? First, the technical view from Mitesh. Is it good to go short even at these levels, sub 10,600? At least we didn't end at the lowest point. Is that technically significant?
I think on the index, maybe you would want to see a breakdown. So what has happened is that 10,550, 10,580 zone was a good support area for Nifty. 26,000 thereabouts is a good support area for Bank Nifty. We've kind of held on to both of these levels. But the structure is definitely slightly on the weakest side. So maybe, once you break below these levels, it could possibly continue the downward journey. Or conversely, what can happen is that you can have this choppiness continue, head towards the upper end of the range and then start correcting from there. So I think clearly the bias is towards more of shorting side, but the only thing is that tactically you would want to see a breakdown happen and confirmation, or sell where the risk reward equation is most favorable to you.
Okay. Second
okay, so let's move on to the second story, second headline of the day. Mid-caps, that is, as I was mentioning, continued to get pummeled in trade for the third day. The mid-cap index slipped over 200 points, ending the day over 1% in the red. SEBI announced additional surveillance measures on stocks which I think additionally put pressure. Not the main driver really, but did not help at the margin at all. Sonal Sachdev is here to explain what is this additional surveillance and the impact it has on stocks. Sonal, over to you.
A certain section of the mid-caps are under pressure because of the additional surveillance mechanism, which means exactly that besides the other mechanisms that exchanges have to control price volatility and extraordinary price movements, this is an additional surveillance mechanism that has been put together by SEBI and the exchanges. And they use objective parameters to try and evaluate the stocks that get into this. What's imposed is a 5% band on trading, a 5% circuit. And there's a 100% margin on trades. I mean, that's the big one, because anybody wanting to trade in any of these stocks requires to pay 100% margins. Now, that just completely kills volumes and trading activity in this. And people would prefer to, trade in other stocks than in these stocks because you need to put so much money up front there. And that is sort of hurting, these stocks in the mid caps. And there are, names like Dilip Bilkon, there's HEG, there's Radico Khaitan. It's not that there's fundamentally, it's there's no comment on the fundamentals of the stocks in this. It's just that they perhaps seen irregular price movement, and now they are being punished for this.
Okay, I'm coming to the question answers in just a bit. Before that, Sanjeev, I just wanted to ask you, how important is this ASM, this additional surveillance margins that Sonal just spoke about? And is the impact over, or are we going to continue to see it?
Yeah, so Lata, I think it's adding salt to the wounds. Okay. We've already seen a lot of weakness because of this, the auditor fiasco. And on top of that, you have this, now it's become a trade for trade almost, that you have to pay 100% margin. So I think it will just let the steam out of these stocks. Some of them may be due for it, but some of them are definitely pedigree names. And I would actually tell investors that where they see this type of conviction and they were looking for opportunities, then please step out and buy, because that is the best time you will get. How long it persists, I don't see it persisting too long. I think it is more of a reaction of when water has flown under the bridge, that you've tried to come and calm the nerves. But I think it's had a double reaction on the negative side.
Okay, you want to talk about any one stock that, or couple of stocks that got pummeled and you think is value?
So first would be Dilip Buildcon, I think one of the best players on the infra/road projects. They've been getting L1 orders across the board. Earnings are fine. Management is very, very professional. I think it is all unwarranted. I would actually stick my neck out at 800 rupees that this should be a 1100 rupee stock in the next 1 year. Second would be Radico Khaitan, up and about, and it is one of the best plays on the alcohol market. It's been doing very well in the consumption beverage side. And third would be, the HEG and the graphite names. Nice. I think there was a lot of froth in then on the back that graphite cathodes had run up far in excess. But still the underlying business remains to be very, very robust given the cut down in China on environment issues.
Okay.
Okay, HEG has come off, but I think HEG is still up some 25 times, I think, from December of 2016. So the last 1 year and a few months. But of course, I mean, it's come off the highs. But I take one more question. A viewer, Sunil, has SMS'd us from Jaipur. He's got 2,000 shares of Adani Power. Now, mind you, Adani Power is not a stock in the SEBI's advanced surveillance list, but the question nevertheless, his purchase price is 31 rupees a piece. And he's been holding them for the last 2 years. He's got a long-term time horizon, and he wants to know whether he should hold or sell. So 2,000 rupees of Adani Power, cost is 31. Sanjeev, what would you tell him?
Well, it's an unfortunate sector and an unfortunate stock. I think it hit a low of 15 or 16 rupees or 14 rupees. Now, that whole sector is in weakness, but, if you look 1 year down, if I hear from the power minister, there are very, very positive signs. He's saying transmission and distribution losses are at the lowest. They are undergoing a lot of transition where they are coming out with model programs on, transferring the PPT and so on. I think the worst of the pain may be over. We've had a very, very strong summer, and power consumption is at a high. But some meetings with some discoms have told me that they are actually going to be in the green, given that they've seen a huge amount of recovery in a lot of the variables. So I said, if you have a 1 year view, I would say just stay put, don't average it. But getting out at less than half price doesn't make sense.
Okay. Well, with that, let's get to the third headline. Banking stocks ended flat as relative outperformers actually in an otherwise downbeat market today, and this was on the eve of the monetary policy. The gains were led by HDFC Bank actually. That stock ended the day almost 1% in the positive, along with Kotak Mahindra Bank and SBI. Those were the few stocks that were in the green. Well, just a word on the monetary policy itself. There are a goodish bunch of people who believe that there will be a rate hike, but the market has actually, across the yield curve, from probably 1 year CPs all the way to 10-year and beyond, have already priced in a couple of rate hikes. So a rate hike need not necessarily push the yields much further, unless the RBI were to say that this is the start of a hiking cycle and sounds extremely hawkish. It's a little difficult to hike and still maintain dovishness. A dovish hike is tough. So it's quite possible, therefore, that 8 could be touched, but the market thinks that everything is already in the price, and it's extremely unlikely that even if there is a hike, yields will jump. Today it's 784, thereabouts. It may go to 794, 795. People are not quite expecting 8.
I was thinking, have you seen a hawkish cut or a hawkish pause? You said a dovish cut is...
Yes, there have been hawkish cuts in the past. But anyway, let's see how much can be managed by the language.
Yeah, absolutely. So commentary is the most important thing, as Lata said. 25 basis points maybe already in the price, but we'll find out. Okay, time for another Twitter...
It's a little difficult to hike and still maintain dovishness. A dovish hike is tough. So it's quite possible, therefore, that 8 could be touched, but the market thinks that everything is already in the price, and it's extremely unlikely that even if there is a hike, yields will jump. Today it's 784 thereabouts. It may go to 794, 795. People are not quite expecting 8.
I was thinking, have you seen a hawkish cut or a hawkish pause? You said a dovish cut is...
Yes, there have been hawkish cuts in the past. But anyway, let's see how much can be managed by the language.
Yeah, absolutely. So commentary is the most important thing, as Lata said. 25 basis points maybe already in the price, but we'll find out. Okay, time for another Twitter question. Robin Jain is 700 shares of State Bank of India at 322 rupees a piece. He's asking for a short-term outlook. Mitesh, your sense?
See, I'm quite positive on State Bank of India. In fact, after the numbers, when the kind of stock started moving up, we've maintained a positive bias. It's hit the first targets of around 275, but I suspect unless until 256 is being broken, I think chances are that the stock will head towards 285, 290 zone. So I think he can just revise his stop loss to levels below 255 and hold it, and I think on the upside target should be 285, 290. This is a short-term outlook.
Okay.
Another poor day if you're hoping for a turnaround, if you're bullish, but could have been a lot worse. The Nifty ended with about a 35-odd point knock. Mid-cap, small caps did a lot worse. Mitesh Thakkar and Sanjeev Bhasin have been answering your questions. They are with us. We got through 3 headlines. We got through and here's the next one. I mean, it was a big boost for Biocon Mylan today. The US drug regulator approved their second biosimilar, that is pegfilgrastim, which the company expects to launch in FY19 this year, although the stock ended the day over 7% of the red. That is about 14% from the high point of today. Ekta Batra is now joining in with more details on what this would mean for Biocon. Ekta.
Well, yes, definitely a milestone approval which came in for Biocon and Mylan when it came to their biosimilar pipeline. So they have received approval from the US FDA for their biosimilar pegfilgrastim used for cancer therapy. Now, it is quite a huge drug and it is quite a momentous approval considering that they would be the first to enter the market when it comes to this particular biosimilar. As things stand, it's around a $4 billion market size, and hence Biocon can probably make up to over $50 million in terms of annualized revenue from this particular drug in the first year, assuming limited competition. However, the stock lost most of its gains from the high in today's trade, and one of the reasons probably is because they have now received approvals for 2 of their major biosimilars in the US, which is pegfilgrastim as well as trastuzumab, and hence maybe there is some concern about the pipeline and what the approval status could look like going forward in terms of biosimilars. And separately, there is always a risk of an at-risk launch for this particular biosimilar, considering that there is a current litigation which is pending, though Mylan did mention that they believe that they do not have any sort of infringement when it comes to those process patents.
Okay, thank you very much, Ekta, but no thanks from the stock investors because the stock ended 7% lower today, although it was a much awaited and a very valued achievement for the company. So more on the stock. Aditya has texted us this question on Biocon. He wants to invest 50,000 rupees and he wants to know when is the right time to enter the market. Okay, he says he's long term, but what is a good time? Let me ask both of you actually. Mitesh, time to buy?
I think this is, after a long rally showing first signs of correction. So I think time to wait possibly. You will get lower levels. 570 is the first support and then possibly 540, 530 could happen. So I think there's roughly about 10% downside left, but I think you should start accumulating around 570 zones and add all the way down to about 530, which is not much. 30, 40 points on Biocon is not much. And I think, that would be the best entry point on the medium to longer term charts.
Okay. Sanjeev, you buy at all? Biocon?
Definitely, Lata, this must be in your portfolio, and it's a credit to Mrs. Kiran Majumdar for getting the type of biosimilar company which is now a behemoth in the global arena. I would say if he wants, he can do a SIP for the next 8 weeks and get a good average price, but definitely this is a stock to be in your portfolio.
Okay, so buy Biocon is advice coming in from our guests. Okay, the last headline, companies under the Insolvency and Bankruptcy Code were on a back foot today. This after SEBI essentially relaxed requirements to comply with delisting norms for companies facing insolvency proceedings. Remember, more than 700 entities are facing insolvency proceedings currently. Lata, will we see a lot of this going forward? I mean, delisting?
Well, there are some conditions to it. What SEBI says is you don't have to go through this elaborate reverse book building, etc. But when you're framing the insolvency resolution, you should have included the delisting as part of the package. As well, there is all the investors have to exit at the same price. That is the erstwhile promoters who are now losing, as well as the minority investors. All of them have to exit at the same point. And the price is very interesting. It is, the residual liquidation value minus all the claims that are possible. That is probably tax claims, I don't know, or, employee claims and stuff like that. So really, very little would be left on the table. And therefore, now more and more promoters will start including this in the resolution plan. And that's why you could see, stocks, okay, Monitor Spot, but the Bhushan Steel, I think, will stand out. Electro Steel is anyway a penny stock. So you could see other stocks showing that, the impact of this rule. But we have a question on a stock which is not part of IBC.
Arcom, that is. Indru Ghosh has tweeted to us. He's got 350 shares of Arcom. Cost is 17 rupees 50 paise a piece. He wants to buy. He wants to know whether he should buy more. Sanjeev?
So difficult. I mean, 17 rupees. The stock has seen a low of 9 and a high of 40 rupees in the last 6 months. And it's all over the place. But, it doesn't have a credentials of a credible company going forward. Given the scope of litigation, the imbroglio of debt, and how do they get out of it. I would say he's still in the money, or he's at break-even. If he wants to be in telecom, I think Jio gives a perfect outlook, or maybe a Bharti after the recent correction, given that pricing wars may be coming to an end in the next 2 quarters, and we think Bharti would be best positioned to take the leap forward as pricing comes back and data is actually the new gold.
All right, gentlemen, thank you very much for answering the questions of all our viewers. And with that, we wrap up this edition of Markets Today Talk Back. Thanks for watching.